Hello and welcome to Business Morning right here on Channels Television. Well, it's the final trading day of April, and I hope April has been good to your portfolio, but it depends on what you've been invested on. If you were invested in the NGX, Nigeria, definitely you're in profit. If you did oil, you're also in good profit. If you did gold, then no, not so much. Risk assets, other global equity markets, definitely you did not cut it in April, but definitely we're hoping for a better month, a better trading month. That's for May. Will it be sell in May and go away? We'll definitely find out. But let's review how the NGX closed yesterday. It's another rally. Again, 237,000 points, new level unlocked. You know, I keep talking about the new levels. That's for the NGX. This one, we've never been here before. The first time, that's if you've been invested in Nigeria's equities market. Then we see for volume, value, and deals yesterday, 1.3 billion. So definitely with the change in the trading hours now extended from 9 a.m. to 4 p.m., I guess we're seeing the volume and the value of trades pile up. This one, deals, 83,445. So definitely, it's been quite the month. That's the month of April. That's for the NGX. Let's flip over to other parts of the market now. That's for the trade. Yesterday, we see for the big gains, UACN, full 10% gain. ZIC is also back on another rally from the previous pause it had before. We also had the telco giants. They came out to play yesterday. MTN Nigeria, Airtel Africa. Then we also had the cement giants also play. Boa Cement, Dangote Cement, Lafarge. So it was a party yesterday, and investors really did have fun in this market. All right, let's flip over to the top trades now. Let's see Access Corp, UBA, Lasaco, Financial Services, top the trades. That's for yesterday. So we're all looking forward to this final trading day. That's the final trading day of April, which is today. We're definitely looking forward to how the bulls either continue. That's this monster rally. Meanwhile, at the NGX, shareholders of the Nigerian Exchange Group have commended the board and management. That's for the group's performance and strategic direction, urging for continued focus on growth and long-term value creation. At the group's 65th annual general meeting, shareholders approved the audited financial statements for the year ended 31st of December 2025, along with key resolutions. Take a listen.
So in the name of God, the merciful, I hereby commission this building for his continued guidance and for the success.
The group chairman of the Nigerian Exchange Group, Dr. Umaru Kwaranga, cuts the ribbon, and the modified trading floor is open for business, although its first official function would be as the venue for the 65th annual general meeting of the NGX.
The company secretary has advised me that a quorum has been formed. I am pleased to welcome you to this meeting, which has been duly convened and properly constituted.
Expectedly, the performance of the group for the financial year 2025 is priority. The growth of assets, equity, and profit when comparing December 2025 to the first quarter of 2026 is also captured.
The consolidated and separate statements of financial position and the consolidated and separate statement of comprehensive income are in agreement with the books of account.
Next is returns on investors' fund, as the chairman announces a total dividend of 3 naira per share for the 2025 financial year, consisting of a 1 naira interim dividend and a final dividend of 2 naira per share. Shareholders are also given a 1-for-3 bonus. This status is acceptable to the shareholders.
We investors, whatever we are after, anytime we invested our money, we need two main categories. One, capital appreciation, and secondly, dividend.
What will it cost us?
However, there are questions on sustaining and solidifying this positive momentum.
Some of our costs. What I would say first on the issue of strategy is that, yes, this is a matter that the board looks at very, very seriously. And one of the questions we're asking is things like technology. How do you turn technology, for example, into a core revenue-making part of our business so that we continue to diversify the business? The other things that we look at is even our core market today. How do we take our core market and take that across Africa, especially with some of the transactions that are in the pipeline?
So 100%.
The meeting witnesses a mutual stance between shareholders and management, even on the re-election of the group chairman and also other directors.
Thank you very much for this. I appreciate.
The NGX has promised even better profit in the next financial year.
All right, and the group chairman of Odua Investment Company Limited, Bimbo Ashiru, has pledged stronger collaboration with the Olubadan of Ibadan land, Oba Rashidi Ladoja, to accelerate economic growth and investment in Ibadan land. Mr. Ashiru made the commitment at the Olubadan's palace when he led members of the company's board of directors and management on a courtesy visit to the monarch. Our correspondent, Bukola Orio, will report.
The ever-busy palace of the Olubadan of Ibadan land, Oba Rashidi Ladoja, hosts the board and management of Odua Group for the first time since he ascended the throne. Leading the team, the chairman of board Odua Investment Company, Bimbo Ashiru, describes the Olubadan as a visionary leader with a strong economic focus. Responding, Oba Ladoja says Odua can compete with any business across the world.
We expect the Dawn Commission, we expect the Southwest Commission to come in and assist Odua.
Next, the team visits the site of the ongoing remodeling of one of the oldest hotels in Nigeria, the Premier Hotel Ibadan, built in the 60s.
The thing of it is that the historical facade is being kept. We are not changing everything, so that if you see Premier, some people that were born before then, if you were born around that time, the Premier that time, if you see it, you know it's the same Premier.
On the ongoing expansion and remodeling of Premier Hotel, Ashiru discloses that the construction work is almost done, noting that President Tinubu is expected to commission the project that would restore the status of Ibadan as a major economic hub and a pride of the entire Southwest region. Bukola Orio, Channels Television News.
All right, let's get a check on the star commodity of 2026, and that's talking about oil. At this point, it's jumped to a fresh 4-year high today on concerns that the U.S.-Iran war could worsen and lead to a protracted Middle East oil supply disruption that could hurt global economic growth. We see Brent crude futures $4.28 higher, about 3.6% up, hitting $122 a barrel. This level was seen last, I believe, 2022. The last time we had a war. WTI, that's sitting pretty above $100 per barrel, 1.42% higher. But we see the premium between both that has expanded a lot, and we have normalcy still maintained with WTI crude cheaper than Brent crude so far. So yes, oil still outperforming this week, this final trading week of April. And also, yesterday, I would say the Federal Reserve, they held their interest rates steady as expected. And Jerome Powell, that was his final meeting as the chair, is going to hand over matters now at the Federal Reserve to a new man that's going to take over. And, you know, at this point, investors are wondering, is he going to be independent? Because that's one of the debates right now. He's a favorite for nominated by President Trump, and he's already scaled most of the the votes right there in the House. So a lot to unpack right there, a lot to look out for in the U.S., because whatever happens in the U.S. definitely impacts the whole world at this point. Let's bring in Mr. Bismarck Rouhani now, as the MD CEO of Financial Derivatives Company. Great to have you in the show, sir.
Good morning, Ladia, and thanks for having me.
Yes, sir. So it's finally here. We've all been anticipating this last meeting and also the handover to the next Fed chair. We'll have that's for next month, I believe. So how do you see, what played out yesterday? Was the final meeting, they held rates, but what was said, I guess, is more important.
Okay, now what happened yesterday was simple. May 15th is the cutoff date, which Jerome Powell steps down as the chairman of the Federal Reserve, but still remains a member of the Board of Governors and an open market committee. Yesterday, 4 members dissented in the decision to maintain status quo. I think one, in fact, wanted a cut. The others they disagreed with the guidance. What has happened is that for the first time in many that we can remember, the Federal Reserve Chairman normally steps down and leaves the board, but Jerome Powell says, I'm not leaving because until the investigation into the building, the politically motivated investigation is stopped. Secondly, Kevin Walsh got approval of the committee, the Senate committee, and his most vitriolic critic, Tim Tellis, has actually agreed to and voted for him. So all is set for Kevin Walsh to take over. The big question is Kevin Walsh going to be a puppet or it's going to be his own man? The truth is that we believe he's going to be his own man. He has his own money. He has his credentials are quite strong. He's married into the Estee Lauder family, and so he has cash, he has pedigree, and he has a character. So we do not expect anything to change. All we do know is that because, and you just alluded to it, the price of oil is at Brent's at 122, but it crossed 126 earlier this morning in Asian trading because of the fears of an eruption of violence again and conflict and military action in Iran. So because of that, the inflationary threat, the threat of inflation emerging in all developed markets, all advanced markets, is very high. And therefore, the job of the Federal Reserve Bank and the Federal Open Markets Committee is very well cut out for it. So we do not expect anything to bring down rates. As a matter of fact, one of the dissension was because some of them are hoping for an increase in rates. So if we have an increase in rate from the present 3.75 by about 25 basis points at the next meeting, that could jolt things a little bit. So, well, what does this mean? It means, one, the dollar strengthened, and if the naira stayed flat against a strengthening dollar, that means it's an appreciation of the naira. I think we should note that. Secondly, it makes it almost impossible for other banks, other central banks in the world, to move in the other direction. If we expect, one, the Bank of England to maintain status quo, the Federal Reserve has maintained status quo, the ECB maintaining status quo, then it becomes almost clearly a no-brainer that Nigerian central bank and other emerging market central banks are going to maintain status quo, if not even increase rates, because there's a inflationary trend, a momentum taking place right now. I think that is clearly. So I think that the reality is that we are in for a world of uncertainty and volatility. And the last day in April, you said it already, sell in May and go away.
Go away.
It depends on where you're going to. Where are you going? Are you going to Dubai, Mumbai, Shanghai, or, bye-bye?
Mr. Ronnie, at this point, I might just sell in May and go hide in a hole right now, because seeing Brent at 122, and you did say it hit 126 earlier,
yeah.
I'm afraid to go to the pumps now. I know that I have to refill my car soon, but I'm scared to go to the pumps.
I filled my car yesterday, and three-quarter tank cost me 96,000 naira, so a full tank is about 120. And that is significant. I can't remember spending 120,000 naira and fueling a car.
Wow.
So what it means is that I'm going to have to rationalize and ration where I go to, and use Zoom meetings instead of physical meetings. The beauty of a Zoom meeting is that I don't have to take money out of my pocket, right? So there we go.
Right, and,
So,
and definitely I'm going to go learn to ride a bicycle at this point.
Yeah.
But do we expect prices to rise at the pumps more than this?
No, I think Dangote Refinery increased their gantry price already yesterday, and that's what I'm talking about. Yeah. So all energy-related prices have gone up. I think the increase was, if I check, the increase was 6.25% to 1,275. That's the gantry, but the pump price is actually 1,335. So that is significant. If the price comes down because of an agreement between the U.S. and Iran, we do not expect that to happen dramatically and immediately. So we've come to deal with the reality. The reality is that we should get ready to pay 1,355 or to 1,400 for petrol in the next 1 month or so, and then we begin to see it come down as global tension and global conflict begins to ease. But if not, let's get used to that.
All right. Mr. Ronnie, thank you so much. Now that I know you have a full tank, I'll be hitching a ride with you going forward at this point. Thank you.
Get your solar panel ready because you need that. That's more important than your car because you need that for your electricity. So again, like you said, the stock market is at 150 trillion. We never thought about it getting there, even before the listing of the Dangote refinery. Can you imagine what will happen at that time? So the projection we made last time, which is that the capital market or stock market will get to 246 trillion in 2026, is within shouting distance. So get ready, fasten your seatbelt because there's a bumpy road ahead.
Yeah.
Thank you.
My belt is fastened at this point. Thank you so much. Mr. Ronnie, enjoy the rest of your day.
You too.
All right, and talking about the oil market at this point, so much talk about the latest exits from OPEC. And we see the global oil market could be facing a subtle but significant shift. The OPEC alliance is showing fresh signs of strain following signals that the United Arab Emirates is stepping away from the group's production framework. The UAE, one of OPEC's most influential producers there. Recent exits we've had, United Arab Emirates, that's effective May 1st, which is tomorrow. We had Angola, they exited in 2023. Then Ecuador and Qatar, they left much earlier. So let's have a snapshot of the current membership now, excluding the UAE. So for 2026, we have Algeria, Congo, Equatorial Guinea, Gabon, Iran, Iraq, Kuwait, Libya, Nigeria. We're here, we're still there. Saudi Arabia and Venezuela. So 11, that's the current number right now. So much to unpack here. We have Dr. Kase Bako, as a founder, Energy Business Analytics, is also an energy economist. Great to have you in the show, sir. Good morning.
Good morning, Ladi. Can you hear me?
Yes, I can hear you, and thank you for staying up. I know you're in Canada. I know it's really early there. But how significant is the UAE's exit or reduced participation? That's for OPEC, at this point, because we've had exits before now. It didn't crush OPEC, but we have a new one.
Yeah, so thank you very much. The significance of the recent UAE exit really lies in the role that the UAE plays within the body of OPEC. So it is a significant oil producer. I think last year it did northwards of 3 million barrels a day. And it's got significant reserves, the 6th largest reserves in the world, and I think ranked number 4 within the OPEC cohort. So it is a significant player within the OPEC space. And in respect also to the main OPEC mandate, which is to regulate supply, it has significant spare capacity of 1 billion barrels a day, which it can bring to the market and take off the market, which is very key to regulating oil supply of the global markets. It is against this backdrop that the exit of the UAE from OPEC is situated and quite significant in that regard. And that is why its exit has created the sort of news that you have. The second point also is the fact that the UAE joined OPEC shortly after the group's formation. And so it has been there for a very long time. So the exit of such a long-standing member of the group also sends, shock signals. Then, of course, there is the timing of the exit. Right in the middle of the US-Israel-Iran war, you have an OPEC member exited and the group looking to appear fractured, as some would describe it. So these are the reasons that give the weight of significance towards the UAE exit that we are witnessing at the moment.
All right, definitely. I know it to be quite crushing to have a business partner you've been doing business with for about 60 years, and just ups and leaves. Definitely a disruption right there. But does this signal a potential shift from coordinated supply management to a more fragmented, competitive production environment? Because we're all used to OPEC always fine-tuning production when they want to influence price.
Yeah, so that also is the next level effect that we are going to be witnessing with regards to the UAE exit. So OPEC, like I mentioned before, coordinates supply. They're able to regulate how much comes to the market and take off from the market, which has an influence on price. So with the UAE taking a walk with that significant amount of spare capacity on its hands, taking a walk away from that group, we are expected to witness more independent supply decisions. And this statement was quite revealed. It was revealed in the Minister of Energy's exit statement, if you will, when he mentioned that it is going to enable the UAE have more prioritize its national policies and make strategic moves with respect to its supply. So yes, what I see in the future is more independent supply from the UAE, independent of the restrictions of the OPEC quota. That's one. On the other side, also, we are also going to see a more concentrated role for the Kingdom of Saudi Arabia, KSA. They are going to have more significant role to play within the OPEC group. Let's not also forget that there's the OPEC Plus group with which coordination of the market happens, and there might be some respite coming from that group. And how well the coordination between those two happens will determine the way the markets are going to be shaping up going forward from this point onwards. However, what is key to note is that we are looking forward to a market where you've got UAE prioritizing its national interest over that of the collective group. And this has been a long time coming. The UAE has, for quite a while, expressed its desire to have more freedom to pump more against the more conservative volume rationalizations that the rest of the group has signed up to, primarily led by Saudi Arabia. So yes, we're going to be seeing a lot more of that more independent production coming on the market.
Right, and looking at the current members post UAE exits, so we have members that are still struggling with oil supply, oil production at this point, and getting barrels, not meeting quota at this point. But do you see the other big producers saying, you know what, I also want to up and leave?
Yeah. So the decision to up and leave is one that you build the momentum towards and has significant effects. So the UAE has taken this decision against the backdrop of the significant capex expenditure it has put to expand its domestic production capacity, and it has goals of expanding production up to something like 5 million barrels a day or north from 2027 towards 2030. So it's made significant investments towards that regard. So the decision to up and leave has been one that has been building momentum, so to speak. If there's any group that is going to be thinking about getting up to leave, then you would have built that level of significance up to that point. The second thing is that remember that UAE is also a very low-cost producer, and so it has advantages in striking out on its own. And so, in a sense, you can say it can afford to do this. And then, thirdly, is that the timing has also given it very good cover, or should I say, an excuse for taking that exit through the door. Right now, there's a lot of chaos, so to speak, with respect to the war, and it is seen as a way to exit without upsetting the markets very much. Already, the war on its own is the major driver of where oil prices are going. So other members leaving is going to be, I don't see that as something that immediately happens unless you've had it in the works and you've planned it for a bit. The effect, however, is that we are going to be seeing post the war, or more structurally, what is going to be happening is more competition for supply with lower oil prices going forward in the market. Structurally, that is what I expect would happen. For the UAE, because of the low-cost oil prices, one can argue and say, well, they will be able to bear it out and sit out under those circumstances. But for other producers, say Nigeria, for example, where the cost of production is still significant, there is benefit to be had with being a member of that coordinating group, so as to provide a floor for oil prices and support the various national programs that member countries have to deliver at their own respective national levels.
Because if we have a fragmented oil industry where we have other producers out of OPEC hitting oil into the market, that could drag down prices, and that's not good for a country like Nigeria that needs revenue. So we should actually hope we stay together. OPEC, nobody leaves again.
Yes.
Let's all stay together.
Yes, that's right. Let's all stay together. And in fact, this very point you've made, Ladi, is one of the reasons advanced for the UAE leaving the group. The UAE argued that it being a low-cost producer and efficient producer was essentially, in quote, bearing the weight, of the other producers who were more higher cost producers, because by keeping prices moderated, the UAE was not able to take advantage of more market share, monetize its volumes at the level that it really required to do. And so it felt that it was not allowed to expand to its capacity. However, if everyone exited from the group, then you are going to be having lower production coming on stream, or rather oil prices fluctuating downwards with pressure on other economies.
All right, thank you so much. Thank you for helping us unpack this. Dr. Kasek Bakon is a founder, Energy Business Analytics, and an energy economist. Thank you for staying up for us in Canada. Thank you.
Thank you very much.
All right, definitely. We did hear Mr. Rwani talk about go and get your solar panels at this point because of what we're seeing with the energy market. Definitely an impact for electricity. We're discussing that right after this break. Do stay with us. Also, Nigeria's power sector stands at a critical turning point. Despite years of reforms, we see persistent challenges from grid instability and liquidity constraints to gas supply issues that continues to limit reliable electricity delivery across the country. For Nigeria, the stakes are especially high. A new power minister is expected to take the reins at a time when expectations are rising and the margin for error that's shrinking right now. Joining us to unpack this, we have Mr. George Atomi, is a director at West Power Gas Limited. And to help us unpack this, great to have you on the show, sir. Good morning.
Morning, Laddie. How are you doing today?
I'm doing fine. Hopefully I can afford fuel with all prices so high. But aside that, I guess I'm okay. Sir, thank you for asking. All right, so I know earlier this month we had the California Africa Climate Forum, and you were there. Talk to us about what played out from that event.
Well, the California Africa Climate event was held as part of the climate week by the California state government. This was the San Francisco Climate Week, and the California government has led the charge to ensure that we use climate-friendly materials for development. The central government is not in support of the entire climate regime, but California, as the fourth largest economy in the world, has decided that it's in their best interest to ensure that the U.S. continues to be on the table. Now, in particular, they want to forge relationships with Africa, and they're talking to Kenya and Nigeria, with whom they've signed MOUs to see how processes that are environmentally friendly are used across industries. And this covers agriculture, covers transportation, covers energy. I know we're talking about power now. And the idea is that when each country that has set itself a target for net zero should be able to take meaningful steps to ensure that this target is attained. In fact, we visited the San Francisco airport where there was practical demonstration of what is now being done to achieve that net zero option. There are 50% of their 2030 net zero targets, and this includes the use of sustainable aviation fuels as part of the requirements for aircrafts. All the materials used at the airport are recyclable and renewable. And just when you go there, you see that the entire atmosphere is very clean. They're very proud of what they've done. And the idea is that if those of us from Africa, Nigeria is on my mind, begin to deploy clean technology for all our processes, then we don't need to go through all the difficult stages of development to attain a cleaner world. We can start leapfrog several segments of development and then begin to do the things we need to do. You're talking about power. If we begin to look at renewables and begin to look at alternative sources, we will be well on our way to that journey. So it was a great conference to be at.
Right. I guess if there's any time to push harder for cleaner energy, more affordable energy, I guess now, it's that time. Seeing oil at touching $126 per barrel, seeing fuel prices rising, that's also, getting into powering your homes. So we need it right now. But from your vantage point, looking at Nigeria's power sector today, have you seen any shred of improvement so far?
Well, from a legislative point of view, you can say there has been a shred of improvement because the legal and regulatory framework always forms the basis of any investment decision that will be taken by anybody. But in terms of its practical implementation, we're struggling. And that's because electricity was always provided as a social service. So we have a mental block towards treating it as a commercial enterprise. Very often we look at the government's end of things, but we forget that even the consumers don't live up to their own end of the bargain. There's so much energy theft. So with all the best endeavors in the world, if all the parties in this energy mix do not play their roles, you are going to have a struggling sector. But having said that, I just want to say that legislation which has decoupled the sector, it has actually decentralized the sector, is what we should be looking at how should be implemented. States should play a significantly more role. They should work with the distribution companies in their network and see how they can generate their own power and embed directly into those distribution networks. That way, you bypass the difficulties currently experienced with the national grid. Because right now, almost all our power comes from the national grid, and we have constraints. We've ignored the transmission sector for quite a long time. The equipment there is very old. It's struggling with new technology, and is simply not being able to cope with the increasing demand. So decentralizing the way it's been done is a good step. And now how states can step up the plate and ensure they take advantage of this new law is entirely up to the political class in that state.
My producer went ahead of me there. Definitely we see the Ministry of Power, we have a vacant seat right there. And if we look at the hurdles for the incoming minister, we see there's a weak power supply. There's a top 5 there. There's more. Fragile transmission grid, gas supply constraints, sector debt crisis. There's still the metering and revenue leakages there. And at this point, it almost seems, do we have people that are just scared of this role at this point? The last minister is moving away from that for his governorship plans at this point. Do we have anybody else ready to take on that ministry and we'll actually see positive outcomes?
Yeah, there are so many people who are very competent, who can handle it. But what is most important for me is that anybody who goes there should go there with a clear intention to make a difference. Because power is such a sensitive thing. It tends to be over-politicized. And that is because it's so integrated into the political fortunes. So the tendency is for people to struggle to go there more out of politics than out of expertise. Otherwise, like I said, any work for a minister of power is cut out. You just listed out the constraints in the sector. And knowledge is power. Once you know what those constraints are, you can then go and deal with them one after the other. For example, the issue of the gas. Gas is at the root of it. Insufficient gas to power infrastructure for one, and then most of our gas being contracted as LNG and exported. It's a policy decision. That's government. If government decides that they must now have a policy direction that favors more power for gas, it will deal with that problem. Otherwise, you will run into the issue that we're having now with subsidies and with inability to cope with the subsidy regime. And talking about subsidy, that's another major source of abuse. And this is why this regime took the decision to take out subsidies both at the petroleum sector and in the power sector. But having said that, you cannot totally run away from this whole question of subsidy, but it is how you direct the subsidy. For example, if you ask me if you are going to give any support to the sector, it should come at the financing level. Push for single-digit interest rates for those who are investing in the power sector. That is, for me, a better way to direct subsidy than this question of attempt to, let me say, subsidize the consumer. Because gas is a pass-through cost, and the cost at which it is produced is ordinarily should be passed through to the consumer. And if you look at market trends today, look at what's happening to world crude oil prices. They all impact on our production cost. If you attempt to pass that on to customers and using a cost-reflective model, you might not just be able to have people sufficient enough to pay the tariffs that will come along with it. The attempt at banding tariffs, as we can see, has not totally worked. It's only just placed more burden on those the government feels are in a better position to pay. And what is their response? Many of them are going off-grid. They're looking for solar solutions, which is not good for the industry overall. So many things to unpack, but yes, you can find somebody, and it's good to always get somebody who is hands-on in the industry. We've seen a very good example of what happened with Geometric. Somebody who is hands-on will understand the pain points, and then you just go. You cannot do everything at once. Just pick your battles. And that's why I said the federal should stay where it is doing, just be like the big brother overlooking the sector, but the state should step up the plate. Look for those things in your area for which there's comparative advantage. In the north, there's plenty of sun. I don't see why they should not be investing more in solar energy. In the southeast and the east, you have gas. There are so many gas fields that are still being explored. I don't see why you can't begin to attract investments for gas to power. In other parts, there are hydro. So that we have, in terms of sources of power, we have an installed generating capacity of close to 15,000 megawatts. But the problem is we can't evacuate more than 5,000 conveniently. So the pain points are known. So the thing is just to have somebody who is committed to ensuring that this is happening. So less of politics, more of professionalism.
I guess that's a good place to anchor it there. Less of politics in the power sector. Thank you so much, Mr. George Atomi is the Director, West Power and Gas Limited. Thank you so much, sir.
My pleasure.
All right, let's pivot to telecoms now. We see the sector is also facing a credibility test that goes beyond pricing or network stability. We see a federal high court there. You're telling the telcos, restore airtime and data credit services. A lot of Nigerians rely on that service, at this point. So bring it back, after it was suspended due to, regulatory issues there between the NCC and the FCCPC. We don't know who the telco should listen to at this point when it comes to airtime lending. But, that word lending, I guess it's tilting them towards the FCCPC. Let's bring in Mr. Oluwole Begunde is the Director of Market Research and Insights at Insights. Great to have you in the show.
Thank you for having me, Ladi.
Yeah, I'm trying to imagine when last you actually needed to lend airtime, or data. I guess you've not had to do that, so far.
Not really.
but definitely a lot of people rely on this service.
Absolutely.
We have estimate there of the amount of Nigerians that actually rely on this service. You can put that up for me. Millions. Definitely we know the telcos have millions of subscribers, and in those millions, there's another million group there that rely on, you need emergency credits, you need airtime, about 40 to 70 million regular users, that's, for that service, about 80 to 100 million plus subscribers. So out of those, occasionally, they would, reach out for, a quick one, when you don't have money to buy airtime or data. So talk to me about what's going on, right now. I'm wondering if a court can actually tell a company, say, you know what, I want you to restore that service now. Is it possible?
Okay, let me give you a backstory.
Right.
So these millions of people, some millions in the millions,
right,
reached out to the FCCPC, sharing that they have been mistreated by the telcos as regards airtime borrowing, hidden charges, hidden fees, high interest rates, and sometimes being forcefully subscribed to borrowing that they did not want to, by telcos using tricky marketing schemes. So the FCCPC came on board and said, okay, look, let's look at this and create a regulation around it that will change that narrative. Now, in that regulation, the Dion regulation now changes airtime borrowing from just a telco purview to being loan services offered by these telcos. And that changes everything. And that's why they came on board to the FCC terrain of telecoms. Now, that changes what can be regulated and can be regulated by the NCC vis-a-vis FCCPC. Because now supply side, now they are saying that if you want to offer airtime borrowing, there are new regulations that you have to apply by before January 5 or till now. And it was because of those new regulations that the telcos were forced to stop. Because if you did not comply to the new regulation, we included now new firms, new partnerships, like with local firms in Nigeria, you had to pay either 100 million fine or you will pay 1% of your turnover. And if you're NTN, I just declared 5.2 trillion, about 52 billion hanging in the balance for you. So that was why they stopped the services, because they are not compliant and they didn't want to breach the law as per the new regulation.
Right.
Now, also for the subscribers, you and I who subscribe for these services, the new law is saying that there are new provisions that allow us to either subscribe or can't subscribe. Before, the reason why this was a big thing was because telcos wanted to push subscriber use and retention. But now this new regulation is saying we want to risk control, risk management, who can borrow, who cannot borrow, and the frequency. So if I used to borrow 500 naira before, and I'll just wake up and want to borrow 4,000, and the telco just agree to do that. But now you can no longer do that, because you have to check, can I pay back the 4,000, and how often can I get that kind of recharge? So it is the risk control now vis-a-vis adoption and allowing the market to leverage services.
Right.
So these are the things causing the challenges between the NCC and the FCCPC.
Right. So I guess whatever service it is you're delivering, when it comes to lending, because lending is a very sensitive segment at this point, because sometimes there's a saying about the lender, the borrower being a slave to the lender. Yeah. So most of the time there's always that friction between them. There's either the lender is taking advantage of the borrower, stuff like that. So regulation is needed, and that's why we see the FCCPC also clamping down on digital lenders. So once you have lending, the FCCPC is out for you at this point.
Absolutely.
You need to be
compliant.
Compliant. So at this point, seeing what's played out so far, do you see the service returning? What are you expecting so far?
The service will return. I believe the service will return, but under stringent regulations now. Because before now, it used to be just, if you wanted to lend, easy. Just press the button, pump, and you get whatever you want. But they're saying now there has to be a process in checking who wants to lend, how much do you want to lend, to ensure that you can actually afford what you lend and you can pay back. Now, the telcos also are now forced to also declare what the fees are in total so that I can consent. That used to happen before. It was just, I wanted 4,000, I wanted 5,000, take. Now it's no longer like that. There has to be a process in place, almost like the banks acting for collateral and the paperwork involved, although now it's just digital. So there'll be delay, of course, in borrowing, and of course there's always a clamp down who can borrow and how much they can borrow.
Okay, so definitely we have some big moves from the telcos at this point, likes of MTN Nigeria, Airtel Africa. We see for MTN Nigeria selling that. That's the MTN group is to acquire an 80% stake in the MTN Nigeria's Momo business. Airtel Africa, they're planning a big IPO for its mobile money units. That's Airtel Money. So big moves coming, and looking at the stock market yesterday, both companies were in the green, and taking the NGX higher. What are you seeing here for these latest moves?
It's not surprising, because mobile money has become big in Africa. It's not just a Nigerian thing. In Ghana, for example, currently the transaction value for mobile money in Ghana currently now is more than all the cash deposits across all the banks in Ghana. To Ghana. In Kenya, for example, it's a culture, mobile money in Kenya right now. M-Pesa is so large that right now, Safaricom that owns M-Pesa has more users than the Safaricom mobile subscribers. That's how big it is. So this is not surprising that's happening in Nigeria.
Right.
The trend is...
I've seen that rally, Airtel Africa hitting 3,021 naira. What an incredible market we're seeing right now. But thank you so much for helping us unpack what's playing out so far. And definitely, we're looking out for the next earnings now for the telco giants right now. Thank you so much, Mr. Oluwole Bengude is the Director of Market Research and Insights at Insights.
Thank you for having me.
Yes. Thank you. All right, after this, we'll go global. Let's see what's happening, what's hot there.
Right, so it's global news for Thursday, and as usual, we start with the markets, and we're starting off with yesterday's announcements of simultaneous reports of one of the four out of the Mag 7, that's the tech giants. So we had Alphabet, Amazon, and Microsoft, as well as Meta, reporting they reported their reports, their annual reports for the first quarter of 2026, and this was driven by gains in their cloud computing, which have seen supercharged growth thanks to increasing adoption of AI. However, Meta, which is not in the business of cloud computing, it failed to meet Wall Street expectations. So now 4 of the companies have announced plans to spend up to about $650 billion in 2026. That's on the back of infrastructure, AI, artificial intelligence infrastructure. So now it was also a dismal close for U.S. markets on Wednesday. Our Washington correspondent, Mary Bird, has details of it.
The U.S. stock market saw some major changes on Wednesday as it trimmed some losses. After a record-setting day on Tuesday, it is clear that investors were watching to see how Wednesday would fare out. As the Dow Jones dropped to 0.6%, the S&P 500 was just below at 0.04%, and the heavy tech Nasdaq was just above flatline. As investors were also watching the movement with the Federal Reserve, as the announcement that the Federal Reserve would be keeping interest rates steady was one that was welcomed, but also a big concern to see if there's going to be any interest rate cuts in the near future. As the Dow Jones continues to be one that the investors are watching, and the big tech industry with the Nasdaq, as if we will see any earnings reports that could mean positive signs for the U.S. economy.
Washington correspondent Mara Bird giving us an overview of Wednesday's trading session from the world's biggest market. So now let's move over to European markets, where they opened in the red. This comes as Investors Digest latest report around the Iran war, which is continuing and is entering its 8th week. And then they're also monitoring a raft of corporate earnings. So the Pan-European stocks, that's a benchmark index for that region, it was down by 0.4%. All the 3 majors, the CAC, the FTSE 100, as well as the DAX, were also in the red. But for Asia, all of them were in the red except for South Korea, which not a 28-year high, closing the best month so far as the month of April wraps up. So and that's largely on the back of SK Hynix as well as Samsung, both in the semiconductor space. Now from there we move over to the Bank of England as well as the European Central Bank, which are expected to have their meetings today. A whole stance we've had so far. We started the week with the Bank of Japan, and then yesterday with the U.S. Federal Reserves, which have all held their interest rates unchanged. So the ECB as well as the BOE are expected to also follow that stance. So the BOE will be announcing their interest rate decision at about 12 a.m. London time and 1 p.m. Nigerian time, while the ECB is expected to announce that later in the day at about 3 o'clock. So from there we move over to Russia, where we see that Russia's Deputy Prime Minister Alexander Novak has said that the exit of the United Arab Emirates from the Organization of Petroleum Exporting Countries, OPEC, and its allies, that it would not affect the market, that it wouldn't trigger an imminent price war. So, and this is coming as that exit, which was announced a couple of days ago by the UAE, is expected to occur tomorrow. But on Sunday, OPEC is expected to have their meeting, where they're also expected to increase the oil output by about 188,000 barrels per day. So despite the ongoing war in Iran and other issues, so with other geopolitical issues within that space, so they're also hiking the crude oil output. So from there we move over to Donald Trump, who's still in the news, and he's saying that there's going to be is going to extend the blockade of the Iranian ports that could be in place for months. So that's it for global news for Thursday. We see next week.
Thank you so much. And it's a final trading day of April. We're seeing NGX up 1.14%. Brent, very volatile right now. $110, $116 per barrel. Dollar down. Gold up. Bitcoin up. We'll bring you more updates at 1:30. Bye for now.